الأخ يحيى أخت أسماء يمكن نبدأ إن شاء الله، ولو سمحت أعطي الصلاحية للأستاذ أنوار إن شاء الله. Yes, Haji, you can share now. You can share now your slides and also video.
Oh, okay. Alhamdulillah. Thank you.
Yeah, inshallah.
Okay, Alhamdulillah.
We start now. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Wassalatu wassalamu ala Rasulillah wa ba'd. Beloved brothers and sisters, distinguished guests, ladies and gentlemen, this is our honor to welcome you all again to our weekly lecture. And today's lecture entitled Wealth Management and Financial Crisis. So a part of our activities and events, we are trying to promote different fields and also aspects related to Islamic finance, banking, wealth management, and also contemporary issues related to these fields to promote Sharia compliant models and strategies, policies. So today we have this lecture entitled Wealth Management and Financial Crisis, and will be conducted by very international expert, and which is Mr. Anuar bin Shuib, and currently chairman of International Development Committee for Malaysian Financial Planning Council, MFPC. And he is very well known and Life Underwriter Training Council Fellow, American College and the Malaysian Insurance Institute, MII, and Chartered Financial Consultant, American College and the Malaysian Insurance Institute. He is also Registered Financial Planner, Malaysian Financial Planning Council, Sharia Registered Financial Planner, Malaysian Financial Planning Council, Global University of Islamic Finance in SIF as well. And he is also a licensed and qualified financial planning practitioner and wealth manager, Bank Negara, which is the National Bank of Malaysia, approved person as well, approved by the Bank Negara, and also approved by the Securities Commission Malaysia licensed person, as is approved by the Securities Commission of Malaysia. Mr. Haji Anuar is also head of Islamic Financial Planning, Wealth Planners as DNBSD. And since he started practicing in 1990, he has been a platform speaker, trainer, moderator, and through the years have specializes in understanding financial planning needs and develop customized plans, clients' needs by a holistic approach. So he frequents international meeting related to wealth management, share the idea, thought with other practitioners in the Islamic and international wealth management community. So this is our honor to welcome Haji Anuar Shuib to conduct today's lecture entitled Wealth Management and Financial Crisis. Please welcome Haji.
Thank you, Dr. Hidin, for the introduction. Assalamualaikum warahmatullahi wabarakatuh. So, inshallah, we'll share and discuss on the topics today, which the financial crisis and how it relates to the wealth management. And for me, this is very interesting topics since we are facing the financial crisis currently. And if we are looking at the current scenario, the financial crisis, I believe everybody wanted to update themselves on what is happening in Ukraine currently. And many people relate of the crisis today that we are facing with what is happening in Ukraine. But the things that in a real perspective of looking at it, it is two separate situations. Whatever happened in Ukraine is one thing, and whatever happened in the financial industry is another thing. Yeah? It's not one thing altogether. Yeah? So that's how we should look at it. Yeah. Just since I did mention about the issues in Ukraine, yes, it does give impact. Doesn't mean that whatever happened in Ukraine has no relation at all. It does relate to the financial crisis that is happening today, but it's two different things. That's why I mentioned about Ukraine and financial crisis are two different things. Yeah, it two different things, but it does relate. Yeah. Okay. Now, let me bring to the issues of financial wealth management and also what is happening in current days. Yeah? So I'm going to bring you through the five area. Yeah? So one is I'm going to bring into the introduction first, and then we look into the history. Then we look into the journey of wealth management itself, and then we look into the current development, and next, the last thing we'll see what we can learn from all these things so that we can have a better position ourselves so that we are ready for whatever coming in the future, inshallah. So a little bit on the introduction on the wealth management. We are looking at the wealth management itself. Wealth management, many people will look at when we say about wealth management, people will see that wealth management is about fund manager, fund house, moving the investors' money from one part to another part, from the people who have money to the people who wanted to use money, maybe in borrowing or whatever it is. Yeah. So these many people will look when they say about wealth management. But when we are talking about wealth management itself, it is actually even broader than that. Yeah? Wealth management can be about managing wealth. And when we say that managing wealth means to say that in any form. So it can be in monetary. For example, we mentioned just now fund houses, fund managers. Yes, it is money. It's about fund. And what about other types of asset? For example, the estate, the shares. So that is also considered wealth. What about inheritance? Yes, it is also wealth. So if you look at the situation today, how it happened in the people who are wealthy today. If you can learn and look at the history of the wealthy people today, or we are talking about the billionaires today, there are many of them who has accumulated their wealth generation by generation. So it means to say that it is not only built or generated by them, but it is generated maybe from their past generation. Let us look into, for example, Rockefeller. We know that Rockefeller, they begin during those old days, yeah, and now is already in the next generation, and they managed to bring through their wealth from one generation to another by managing those wealth so that those wealth do not deplete. So they want to control as much as they can to optimize the value of their wealth. So that's what people have been doing when we say about wealth management is about managing those wealth and how we can avoid the wealth being reduced when we move from one generation to the next generation. So that's what it means by wealth management. Yeah. Okay. So in order for any organization or any individual to do that, when we're talking about wealth management, so it means to say that the person need to have a correct strategy, the right strategy, in order for them to be able to move their wealth from one generation to another without reducing the value of those wealth. Why I say so? Yeah, because for example, let's say a person living in United Kingdom, when he pass away, move from this world to hereafter, so what will happen? So when this happen, this particular person's wealth will be transferred to the next generation, to the next of kin, to the family members, to beneficiaries. So when the transfer going to take effect, they will be taxed on the estate, which, for example, I just use the figure number 1 here. Yeah? So I use figure 1, maybe 10 million, for example. So if the person has 10 million pound, for example, when the wealth being transferred to the next generation, okay, Zafra, wealth management means, I think, how to manage this wealth in a way to avoid financial risk and that may face in life. Yeah, you are right. That's one of strategy to manage the wealth too. Thank you. Very good sharing. Okay, yeah. So when we say about wealth management, when he wanted to transfer, when, for example, just now, the person in UK, so means to say that this particular person's wealth will be reduced because of the tax is 40% for estate, means to say that the wealth will be reduced by 4 million. So whatever left to the next generation is only 6 million. Instead of 10 million, will be transferred to the next generation. So it means to say nearly half of the wealth already being reduced. Yeah? So how to do that? So they will have a better strategy, how to avoid this figure being reduced by using tools available. So whatever tools available, for example, maybe they have trust structure that they can create. They have companies. They have different jurisdiction that they can create certain entity to enable them to reduce the risk of losing those wealth. Yeah. So this, when we see about wealth management, yes, yeah, it's about not only managing the wealth itself. Yes, you said about managing the risk also. Yeah? So in this situation, when the risk of death, when death happen, so the estate tax will come into picture and take away part of the wealth. So this is another risk that need to be managed too. Yeah. Okay. Great. So let me bring into a little bit of history. So now, when we are looking about risk, so it may involve about risk of die prematurely, risk of rates, interest rate, base rate, whatever it is, risk of those particular business losing in the running the business, and many other types of risk, political risk, and so many other risks that we can see. Currency risk. So now what we're going to look at today, we're going to discuss on the part of financial crisis as one of the risks that we need to face. Yeah. So when we said about financial crisis, people will say about the financial crisis that happened in 1998, December 98, talking about financial crisis 2008. So these are among the common discussion when we are talking about financial crisis. But when we're looking at the financial crisis, it began long ago. If you look at it, the history of financial crisis that being noted or being described, being written about what is happening, what had happened during that particular situation. Okay, many types of risk shall you provide as about them if you don't mind. Okay, yes, I think I shared already just now. Premature death, risk, managing, if you're talking about asset class, about what happened to banks, we are talking in US, for example, Signature Bank and SBB, so Silicon Valley Bank, whereby they're talking about they put their asset, maybe about 80% of their asset into single types of products, for example, government securities. So this is another risk. So these are among the risks. There are many types of risks, and this I can give you just some example. Yeah, and it's not limited to. Yeah, there are many other types of risks that we need to handle. And one of the important that we're looking at now is the financial crisis, which nobody can run away. We're talking about financial crisis. Yeah. So let us look at the financial crisis. So just now we are talking about the 20th century financial crisis, but it is not limited. If you look at it, even the first century, they already has a financial crisis. 3rd century, 7th century, 14th century, 17th century, 18th century, 19th century, 20th century, and the current one, 20th and 21st century. So means to say that we cannot run away from financial crisis. So, but I'm not going to bring you to all these crises that happen. Yes, I'm going to bring you to the first one that happened during the 1st century financial crisis. So if you're looking at what is happened during the 1st century financial crisis, yeah, during that time it was on the year 33, yeah, 33 CE. Wow. So we bring back this during Roman Empire. So during this particular period, 33rd CE, 33rd CE, whereby during the Emperor of Tiberius, yeah, during this time, what happened during this time, whereby currently we are looking at we have our reserve in US dollar, right? So during this time, they are reserved in the form of land. So if anyone wanted to give credit, whatever it is, they will look at the land. If you want to give more credit, you got to have more land as a security. So that was happening during the 33rd CE. Yeah? Okay, now, if we're looking at during that time, this being noted by Tacitus, and then whereby during that time, Julius Caesar, they already passed the law in 49 BC, which is before century, yeah, BCE, yeah, which they already regulated usury. They already regulated usury or interest, yeah, where it requires a person who wanted to lend the money to have a farmland. So this is what happened during that time, yeah. And in order for them to be able to loan out more money, or they need to have the more farmland. So that's how it works during that time. And we're talking about trade. It is not only now we have trade, yeah, internal and external. During those days, there are already trade between Roman Empire and outside. Yeah? And the trade is something that's very important for any empire, and so as during the Roman Empire. So the trade is already there. So means to say that what happened during that time when they wanted to have a problem with the inflation, they also need to manage the risk. They got to reduce the amount of money that being spent during that time. So as if we can see currently that we can relate, we have like America today. Oh yes, we can send the material later, Mr. Abdul Rahman. Yeah, yeah, can, no issue. I can send to you. Okay, now, so today we manage it via like Federal Reserve. They manage their interest rate. Yeah. So those days also, they also have the entity to manage this. Yeah. So means to say that this financial crisis that we're talking about already happened centuries ago. It is not currently. So if that is happened, what we can learn? Yes, it is a lot that we can learn. But why it keep happen now and then? because even though there are history for us to learn, but nature of human being, we forget the mistake that we have done. For example, what happened in 1998 is different case. Yeah, that's why I cannot compare what happened in 1998. What I can do is compare what happened in 2008 and currently what is happening right now. So what are the similarity between the financial crisis in 2008 and what is happening right now? Okay, in 2008 financial crisis, we call it property meltdown. It's triggered by the credit crunch or by the property market, whereby they always give borrowings, yeah, to the people who wanted to buy property. So and the investor love to give money, to lend money to the people who wanted to purchase the property. Why? Because the property purchase become the security. So when the people cannot pay the money, they will take back that property belong to them. So that's something secure there. Yeah? That's in theoretical part. Yeah? But when they give out they lend the money to all the people who can afford to pay the installment, and all those people who can afford already have their own houses, then they wanted this particular investor, they wanted more profit from this mortgage market. So what they do, they lend out the money for people who cannot pay the installment to purchase the property. Then this is where the trouble start coming in, whereby they cannot afford to pay, they got repossess the property. When they repossess the property, many people cannot afford to pay, then the property market will fail. Then for the one who can't afford to pay, even though they can afford to pay, but it's useless, because why? The property that they bought maybe 1 million in prior to that crisis, now value only half, for example, maybe left 500,000. And the surrounding property already price drop. No point for them to continue paying the installment. So this is what happened. And this happened because the relax of regulation prior to 2008 financial crisis, whereby they allow financial institutions to have creativity to create multiple products like mortgage product, high leverage, and all these things. So that was what happened during that period. And you can see what happened in this being recorded in the movie called The Big Short. You want to watch what happened during that financial crisis 2008. Okay, now bring back to what is happening right now. So the lesson learned from that is relax of regulation. In 2018, we have Donald Trump become the president, and at the time he relaxed the regulation, whereby the financial institution with asset supposedly below 250 billion need to be scrutinized properly. Means to say, whatever things that the financial institution need to have, they need to have like risk manager and etc. All that need to be in place. Yeah. But during 2018, Donald Trump, president, they relaxed the regulation. They put it that the bank instead of 50 billion and above need to be highly scrutinized, they raise it to only 250 billion only need to be highly scrutinized. So because of that, they are bank even running the financial institution without having the risk manager. So that's where, when we're looking about one of the bank that collapsed recently, even since a year ago, they are already red flag about how they're managing the asset. But the CEO of that particular bank just keep it quiet and said that it's okay. Because why? They need to take more risk in order for them to pay more return to their shareholders. So this, again, if you look at it, the ethical practice missing in this particular situation during the current crisis that we are facing right now. So ethics are not there. Yeah? Okay. Now, so if you look at it, any financial institution, main requirement, they must always at all time has a risk manager in order for them to manage the asset so that they are not concentrated on any single risk. Yeah? Okay, now let me bring into the journey of wealth management itself. So now I share a little bit just now about the financial crisis. So let me bring into the journey of wealth management itself. We're talking about during the time of crusade, yeah? We're talking about during the 1800, yeah? All that, mostly the property was held prior to the legal firm being recognized and etc. Mostly is being handled by paternal. For example, during the crusade, before they go for crusade, become a crusader, they will hand over their property to another person who must be male. Yeah? For example, maybe their friend, their father, their brother, and etc. Eh? So when they come back, they will take back those particular properties or asset. Yeah? So that was, yeah. And then after that, during the 1900, the way to manage is highly legalized, yeah, whereby the people using the trust structure, foundation structures, and etc. to manage their wealth. Yeah. Okay. Thank you. So there's sharing already in the Google about the slide. Yeah. Thank you. Okay. Now, and then fast forward, yeah. So we're talking about during the 1980s. Yeah? During the 1980s, people start to know about private, we call it the family office, yeah? Multi-family. Then it evolved further. Yeah? During the year 2000, people know about the multi-family office because we are talking about legal. Yeah? People using legal structure, like I mentioned to you just now, using foundation structure, using trust structure, using companies, using the advantages of different jurisdiction in many parts of the world to manage their wealth better and to reduce paying tax. Yeah? So that's all these things being done legally. Yeah? So this is the development that happened in the wealth management. And then after that, during the 2000 onward, it's more on technology. So whereby people need to use technology a lot in order for them to be able to serve the client better. For example, we have the people who are serving the customer using the robo-advisor, using the technology, using the software, using the application, and etc. So that's what happened 2000 onward. And now, I hope that the slide does change from your side. So, okay. Now, then in the current scenario, so what we can see is that in the wealth management industry right now is more towards destructive, and yet the transformation, impact of digital technologies and so forth are very important nowadays. I'm not sure on maybe whether in your country you have what type of robo that you have, but in my country, in Malaysia, we do have like Maybank. We have our application like many other fund houses. Yeah? For example, like our we call it PNB right here. We have the fund that they create whereby if you spend money, whatever the small change, they will directly transfer to your investment account and etc. And when we look at it, it means to say that the customer demands are evolving. When the customer demands are evolving, as the provider of the services, be it bank, fund houses, insurance or takaful, they need to be able to fulfill this demand, these needs, yeah, of the customer, whereby most of it will be highly likely involve technology. And then when we're looking at it, also it needs the business model to be rebranding, re-image, yeah, to create differently. Because whatever services that we've been doing traditionally may not be appealing anymore to the current customer and current market. When that happens, what the customer will be searching for the other competitor. So in order for us in the wealth management industry to be able to survive, to be able to satisfy our customer, we will need to make sure that we evolve together. We always be in the upfront in order to serve the customer. Okay, let me bring into the differences that happen. Yeah? Okay, we can understand that currently China, for example, are investing highly on the digital currency. So, and traditionally, we are using the normal fiat money like the US dollar, for example, to do trading. And with the crisis that happening in Ukraine, the US already blocked Russia from using SWIFT. The SWIFT is whereby you can transact the money in order for you to do trading. Yeah? You want to do trade with other country. So without SWIFT, you cannot do payment. When you cannot do payment between one country to another, for example, in this situation, they block Russia. The Russian bank don't have access to SWIFT, so they cannot do trading. Okay. When this happen, means to say that people see that if we are too dependent on Russia right now, means to say that, on US dollar right now, US dollar can do whatever they want. United States can do whatever they want to stop us when they don't like us. So like how they don't like Russia. So that's why people in many parts of the world now felt that it is not safe anymore to hold US dollar. So that's why you can see that many parties, many parts of the world now, even China among the one that accumulating gold more right now. Eh? So, okay, now that's one thing that happened. But what else that happened? Okay, now, when I said just now, China really invests on digital currency, you can see that in the past, trade are being done using the normal transaction, using SWIFT, but now more trade, the trade using the digital yuan also increased right now. And even United States also looking for their dollar digital currencies also. Yeah? So these are a few things that we can see. So now we are talking about the countries. What about the individual who wanted their wealth to be managed? With the crisis that happened in Ukraine right now, if you're aware, there are many people bringing their wealth out from the Western country. And among the huge amount of them, big amount coming from Russian. Yeah? And they are bringing to the Gulf area. So we are talking about Bahrain, about the countries that Dubai are benefiting from what is happening in Ukraine right now. So when I say this, so I believe why we discuss about this is in order for us to look at the opportunity available. So means to say that they are no more they are worried about having their wealth in the western part of the world. Now they wanted to bring their wealth out from the western part of the world. And the parties that can benefit may come from the Gulf area, they may come from Asia. Now, I bring you a little bit on what is happening in China, for example. When China wanted to have better control of Hong Kong, what happened? The Hongkies, they moved out from Hong Kong to UK. So when they move out, they bring their wealth as much as they can to United Kingdom. And many, they bring their wealth to Singapore. Because why? Because the weather in Singapore is much, much better compared to UK. And furthermore, because in Singapore, majority of the population is Chinese. Yeah? So Chinese Singapore. So that's among the reasons. So they feel comfortable, they feel at home when they are in Singapore. So who are benefiting from the China involvement in Hong Kong? So for sure, UK and also Singapore. And we are not talking about small amount, and we are talking about in trillions of US dollar that being moved. Yeah. So it's huge amount of money to be tapped. So which means that the wealth manager in this particular part of the world, in UK and also in Hong Kong, are benefiting from what happening in Hong Kong. So as what happening in Ukraine currently, benefiting a lot to the wealth manager in Bahrain and also Dubai. And not to forget also in Singapore. Yeah? But the thing is that when talking about the crisis in Ukraine, Singapore is not quite a place that the Russian wanted to transfer their wealth, because Singapore is not strange to America. So that's why it is safer for the Russian to bring their wealth to the Gulf area, whereby the Gulf area is more inclined towards Russia and China. So this, if you can say about wealth management, it does involve politics, geographics, and etc. So it is not an island. It is not an island, but it's interrelated. Yeah. Okay, but it is totally different part. Yeah, but it does relate to one another. Okay, let me bring you into the wealth management itself. Yeah. So just now, when we said about the crisis, will always happen. So when the crisis happen, who will benefit out of the crisis? The wealthy always benefit from the crisis. How the wealthy benefit from the crisis? Okay. Let's say there's one family called Wallenberg family in Switzerland. If you learn about Wallenberg family, about 40% of Switzerland population does work for Wallenberg. And who is Wallenberg? Wallenberg does fund both sides of the war during the war in the West, whereby one brother fund one part, one side, another brother fund another side. So they are benefiting from both sides when they use their wealth to fund the war. So this is what the wealthy people do. They fund the war, benefit from that. So when we're talking about the crisis in Ukraine currently, who are benefiting? So the manufacturer of weapons are the one that benefiting. And as we know, US are the one who manufacture weapons. You can see that they are supplying huge numbers amount of weapons to Ukraine. And at the same time, so as other Western countries also supplying weapons to Ukraine. And Europe even create a fund, European fund, yeah, in order for them to use that fund to support Ukraine in order for them to fight with Russia. So it means to say that the weapon industry is the one that making tons of money during the war, during the Ukraine crisis. So this is what happening currently. So let us look at the parties that can help the wealthy, or can help the people who has the wealth to make sure that during the crisis they are benefiting. So in order for, if let's say as an individual, we may be busy running our day-to-day business. And our day-to-day business, normally, for example, if I am in F&B business, I will be focusing on my F&B business. I may not have time to manage other things, and I may not have expertise to manage other things. So who can help me to benefit, to get more value from what is happening in many parts of the world, for example? So it is the wealth management firm that can help the wealthy to make sure that they are benefiting out of what is happening. Yeah? So for example, let's say I bring back to the financial crisis 2008, for example. When the financial crisis 2008 happened, I believe all of you know the Lehman Brothers. Yeah? So Lehman Brothers is one of the parties that highly involved in mortgage market. And Malaysia, not to be excluded, they do came to Malaysia, but Malaysia take a very simple step, and our central bank already give advice to all the financial institution in Malaysia to look when any product being offered to them, they will make sure that if they don't understand the product, they will never take the product in. So when Lehman Brothers offering the product to Malaysian financial institution with the explanation and so forth, and the financial institution in Malaysia saw that it is too complicated of the product, then they will shy away from the product. They say, no, thanks. I'm sorry, I don't understand about your products. And we have order from our central bank. If we don't understand ourselves about the product, we cannot take the product in. And that saved Malaysian financial institution. Yeah. And due to the simple order by our central bank, that saved us during that time. But what about Singapore, for example? Singapore does expose to Lehman Brothers product, for example, or the mortgage product, because in Singapore, there are financial hub whereby many people put their wealth there, and many people from many parts of Asian country, especially from Indonesia, they are putting their money in Singapore and being managed by the wealth management firm in Singapore. And when this product being offered to the financial institution or wealth management firm in Singapore, they are very happy and very eager to get the product because the promise of good profit from this particular product, and they love complex product. Yeah? So different attitude does carry different risks in this situation. So if you look at it, they love complex product, they love to receive high return, but end up they lose a lot of money. But again, yeah, when we are talking about being a wealth management firm or being a wealth manager themselves, what else that you need to understand, or what else that you need to do as a wealth managers? Yeah? So in this situation, even in financial crisis 2008, many financial institutions or many wealth managers, many financial advisors suffer, lost money, lost their clients' money. And when we say lost money, means their asset under management deplete. But among many of the financial institution or the financial advisor or wealth manager in Singapore that their wealth, their asset under management deplete, there are some wealth manager or some financial institution or some financial advisor in Singapore where their asset under management increase. Wow, interesting, right? Yes, it is. Yeah? Indeed, it is interesting. And why are they so good about managing their asset and etc.? They are also exposed to the same risk. But why their asset under management increase? It is because they are being ethical in practicing their wealth management services. So how? Yes, being ethical, they are performing their duty. When you're talking about wealth management industry, many people, many managers, they wanted to have more wealth being transferred to their firm, their institution. But when crisis happen, many are fail to manage the situation. So this small number of wealth managers where their asset under management increase, it is because they manage the wealth of the client, managing the client successfully. Because during the crisis, for the one who do not do it properly or ethically, there are cases whereby the client cannot contact them. The client have less accessibility to them. So this create problem, relationship problem between the client and the wealth manager. But the wealth manager that you really perform, they preempt the customer. How to preempt? They will call the customer, they will inform the customer that we are facing this situation, Lehman Brothers collapse. Then the customer will prepare themselves. Okay, what next? What I need to do? So nothing much we can do right now because every asset are going down. But what we should do now is that we should reserve our bullets. Means to say, have a reserve cash. With this particular reserve cash and the price going too low, that's where we're going to buy. So this is what happened to the wealth manager where their asset under management increased during financial crisis 2008 because they really performed their duty, they're being ethical to serve their customer, then that's where the asset under management increased. Because for example, when the price of the asset moved down and they managed to purchase those assets at a very deep discount with the slight increase in the value of the asset already managed for them to recover and profit. Yeah? So this is what happening. So this is where when we're talking about wealth management and crisis are something that you cannot part with. When you wanted to manage wealth, you got to know how to manage crisis. You got to know what crisis you are facing, understand the character of those crises and how you can benefit out of it. So this is something that is very important in wealth management. So now, in our current days, for wealth managers, what is important for them is to be able to have data. With the technology that we have today, with the computer, with the AI and all those things, data is very utmost important. From the raw data that we have, we can transfer, move it into smart data to benefit the wealth manager or wealth people in the wealth management industry. And when this can be translated into helping the customer protect their wealth. Many people, when we say about wealth management, I hear from outside people will say that for the wealth manager, main function is to generate as much as they can to their customer. And this is very wrong concept. What is important for the wealth manager is number one priority is to protect the client's wealth. Generating the client's wealth or increasing the client's wealth is considered priority number two, not number one. So this is the wrong concept that people have on the wealth manager. Other than that, we have now with robo-advisory. So there are some part of the work that need to be done by artificial intelligence, need to be done by machine learning. Yeah? So by the computer, something that repetitive. Only the part that involve human character, for example, let's say people don't want when they call, they wanted to hear the real human voice, not the robo voice. Yeah? So these are important things, yeah, in order for the wealth manager to be able to serve the customer well. Again, when we are saying about the wealth management industry, when we say it is human, the main character of human being is the leadership. When we become the wealth manager, the client will put trust on us. This means that the wealth manager got to hold the hands of their customer to help them going through the crisis. So we cannot let the customer being on their own, lonely, not being updated, and try to find ways of themselves to coming out of the problem. So this is where the leadership role of the wealth manager are very important in order for them to be able to stay in industry and performing in this particular industry as the wealth manager. Integrated approach to wealth management. Just now I mentioned about family office, using structures and etc. There are movement in years ago, whereby if you realize that in the past 10, 20 years ago, people are looking at banks or financial institutions that they can put trust on to manage their wealth. But in the past few years, you can see that people don't prefer to put their money into the bank. People would prefer to put their money to the wealth manager. And wealth manager can be a small firm or can be a big firm, which they personalize the wealth management approach on that particular customer as a kind of one-stop center. The tax services, they're talking about cash flow management, everything will be done by the wealth manager. So these are a kind of things that the wealth manager do. Online, mobile, so these are the things that they want. For example, let's say I am with my client also. Even when they are my clients, sometimes they are asking for, they want the birth certificate of their own children also they ask from me. So because why? Because they become too dependent on the wealth manager. So is it good or not when the client become dependent on the wealth manager? One perspective, that can be good. Because why? You know that the client will stay with you and you will be able to serve this particular client for a longer period. And that is something good from the wealth management industry. So I will bring you into the conclusion, whereby when we're talking about wealth management itself, it is something that evolving. It is not something stagnant. It is something dynamic. That is what? Competitive. If you can't compete, you can't evolve, you cannot offer a new things, something that to fulfill the client's demand, you will be out of the service. It requires agility. You need to be agile with the changes. For example, the situation currently shared just now. People do not trust the West anymore. People are moving their wealth to the other part of the world, maybe to Asia Pacific. Maybe they bring it to Asian country, or they maybe bring it to the Gulf country. So you need to be able to cater of these services. That's why agility is important. When we're talking about this, means to say the law and all those things does play an important role. So the country need to be able to cater for these changes also. Persistent. Again, wealth management is about trust. That's why if something happening, for example, politics is not stable, then the trust will be eroded. So that's why any country, political scenario and everything must be taken care of. So they will love to bring their money, their wealth to part of the world, to the country, to the jurisdiction that are stable. Involve effort. Nothing come easy. You got to work hard. Because if you just stay stagnant, doesn't mean you are just at that point, but in actual fact, you will be moving backward. Because why? Everybody else will be moving forward. So you need to put a lot of effort, learning new things, share, get to understand more about the clients and how you can serve the client better. And always need new strategy. People don't like for you to be just like that, year in, year out, no changes. People want something new, something. So when you're talking about wealth management, we need to ensure that we always keep updated with the changes that happen. And with that, I think I concluded my slide presentation, and maybe I'll open for question. Please. Any question? No question. Oh, somebody raised hand. Okay.
Thank you, Doctor, for this wonderful presentation.
Thank you.
May take a few questions. Mr. Tayyib, you can talk now.
All right. Thank you so much for this well organized presentation, and the host and also the speaker. My question is just to ask the speaker about how can we be sure that the asset manager or investment management company are complying with the Sharia part of the business. For example, how can they make sure that the money being put into under their management are not put into things that are not Sharia compliant? For example, putting money into like some companies that produces alcohol, or putting money into, for example, as you mentioned that during the war, some country benefited from the crisis by producing ammunition. Imagine if a country is fighting a Muslim country, and how would the management company be sure that they are not fueling their investment into this, and that is going back on other Muslims and using this ammunition to harm our Muslim brothers and sisters? That's just my question. So
Thank you so much for that question. Yeah, I think that's a very good question. And yeah, one of the very important part on Islamic wealth management, just now I'm talking about wealth management as general. So now we're going into the Islamic wealth management. So one of the very important part in Islamic wealth management is whereby it must be Sharia compliant. When we're talking about it must be Sharia compliance, in order for us to be able to have the Sharia compliant wealth management, we need to have the Sharia advisor sitting there. In Malaysia, we do have our Islamic Financial Services Act, and we have the Capital Market Services Act. And we have two acts is because we have two regulators in Malaysia. One is Securities Commission of Malaysia, and another one is Central Bank of Malaysia. So there are two parties. Yeah. So the Central Bank of Malaysia to manage the banking businesses like Islamic banking and also takaful, whereby the Securities Commission to manage on the wealth management part, which we're talking about unit trust investment and etc. So and fund management. So that's where the two regulators come into picture, and there are two acts that govern this. And these particular two acts specifically mention that the institution that to manage this wealth must have their Sharia advisor. And if I were to bring into Islamic Financial Services Act, which is under the Central Bank of Malaysia, where this act states that you must have the Sharia committee consists of 5 Sharia advisor inside the Sharia committee. And that also very specific, the 3 must come from the person who has the background also fiqh or fiqh muamalat, and the other 2 may come from other discipline. So that's how it guides us. This we're talking about Malaysia. And in our Securities Commission also, which governed by Capital Market Services Act, whereby it's specifically mentioned if Islamic or Sharia compliant fund to qualify or stocks, because the stock market also under Securities Commission, that particular stock or that particular unit must comply with the requirement as per mentioned by the Sharia Committee in Securities Commission. So that's how you got to comply. So when we said just now about complying to Sharia, yes, it is clearly stated in the Act how to comply with Sharia. So, and now in our another part, we already make it better by earlier we are talking about we did not include the cash reserve, but now we already include the cash reserve, which must not more than 30%. Yeah? So that's among a few developments that's happening. Even in US, for example, we have the Sharia compliant stock in US. So if we adhere to that, inshallah, all will be good. Yeah? Unless these people whom we say that Sharia advisor themselves, they are not competent and they are not ethical. That's another issue. So, but at least I believe the requirements that in order to qualify to be the Sharia advisor themselves, they must have certain qualification, and that we put with that trust that we given to them, inshallah, we will be able to get the investment that Sharia compliant. Yes, thank you. Okay.
Thank you very much, Haji, for the clarification. And I think if there is any more question, please raise your hand. I think Brother Salam would like to ask. And could you please raise your hand if you want to ask any question, or you can write in the question box.
Assalamu alaikum.
Walaikum assalam.
I am Salam Smithim. I am economic consultant from Iraq.
Okay.
Yes.
Please, yes.
Yes. Thank you for this good, as you can say, lecture. And I am really grateful for Mr. Haj Anwar, and also for the Islamic Economy Club for this invitation and these activities. Barakallahu bikum wa ja'alaha fi mizan hasanatikum.
Amen.
I wanted to, as you can say, to discuss or to ask you, Haj, about something. I am here working as a consultant for one of the Islamic banks, but it is very important to say that in Iraq we have now, as you can say, a dualism between the impacts of the financial crisis in the world. One of them, because you know, all the world is now suffering from this. The other one is in Iraq, we have some problems. I'm sure that you heard about this. But the most important thing that I want to ask you, it is out of all of this. How come that the Islamic Bank can measure the impacts or the side effects of this crisis on his transactions? Because, you know, the the non-Islamic banks, they are trying to treat their clients and all their transactions by, you know, by riba. We are non-riba transactions. How come we can, as you can say, manage this and trying to minimize our losses? And thank you again. Also, I pray for my God to bless you and التماس دعاء in this, as you can say, ليلة الجمعة.
Inshallah. I mean, thank you, Dr. Thank you.
Thank
Yes,
you.
Haji,
Yeah.
could you please?
Okay.
Yeah, go on.
Thank you. Yeah, it's a very good question because I believe that even that question not only being asked here, but I think in Malaysia also we do receive those questions, yeah, whereby the method of calculating, yeah. For example, we here we call it profit. In Malaysia we call it profit. So the rate is called profit for Islamic financing, and we don't call Islamic loan, yeah, we call it Islamic financing. Because the Islamic financing, we use the contract, whereby we are talking about can be rental contract, can be services contract, or we're talking about wakala, mudarabah, and all those kind of Islamic contract which is Sharia compliant. But with method of calculation, we're still using similar calculations, similar formulas, and so forth. But the understanding is that, for example, okay, let's say home mortgage, for example. Home mortgage, maybe the rate, we can say that maybe 3%, 4%, for example. So 3% or 4%, maybe I put the figure 4% for the rate. Use the same amortization to calculate. For the conventional finance, also we will use amortization. For Islamic financing, so we use amortization. But what separate between these two, the contract that we have for conventional is a mortgage contract, which means to say it's a borrowing contract. I borrow money from you. When I pay, I must pay my interest based on how many months that I borrow the money from you. So every month, how many percent I must pay riba to you. So that is the conventional finance, whereby it is IOU contract. Whereby in the Islamic contract, it may be a rental basis. So I pay you rental. When I own the property more, I pay you less rental fee, because from rental fee that I'm paying, my portion is more than your portion, because the bank portion will be reduced years by years, year by years. Maybe for the next, maybe the financing is for 30 years, for example. So the amount of ownership of that house that I purchased or we put under the contract, the ownership that belong to me from that particular house will be increasing year by year. So I pay less rental fee to the bank. So that's how it works. I use one example. So means to say that it's totally two different contracts between Islamic finance and conventional finance. So and when we're looking at maybe the figure you see different, but the contract is the figure you see like you look like the same, but the contract is different. Another advantage, if you look at it, we do have contract in Malaysia whereby we have ceiling. For example, with the increase of rate for the conventional bank, normally the rate will be increased too. But for the one that you following the Islamic contract with the ceiling, the rate cannot go above the ceiling. So that's another advantages. So that's why when looking at this scenario, on my point is that Islamic contract or Islamic finance is much better than conventional finance. I hope I do.
Thank you, Haji. Thank you very much. Is there any more question or any more comment from the guest? So I would like to thank you very much on behalf of the Nadal Iqtisad Al-Islami. We appreciate participation of all the guests from all over the world who joined us over this platform of Zoom and as well as from the classroom. We thank you very much for your participation and attendance. And we also thank our management, especially Ustad Dr. Al-Ubaid, who is the Director General of the Sadr Islami, and Brother Yahya, Sister Asma. Thank you very much for your effort. So, and our special thanks to Mr. Anwar Shuib, our guest speaker, for this wonderful session, and for your time and effort. We appreciate, Haji, your participation, your valuable time, and we thank you very much. And inshallah, we hope to see you. We hope to have your more sessions in coming future, inshallah. So may Allah bless you and may Allah reward you. Haji, if you have any remark, concluding remark, please. So I think Haji is already, I think he left, he has problem. Anyway, we thank him very much. And inshallah, we'll see you soon in upcoming sessions, either in Arabic sessions or English sessions, inshallah. Jazakumullah khairan. With that, we end our session here. Subhanakallahumma bihamdik. Ashhadu an la ilaha illa ant astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.